This is Josh Jalinski, the financial quarterback. Don't touch that dial. Hi, everybody. This is Josh Jalinski, the financial quarterback. We are back with Euro Pacific's Peter Schiff, talking all things markets, Trump, gold, get his take on Bitcoin, and all of your questions. We're live on Twitter Spaces. We're on Spotify, YouTube, Apple, iTunes, wherever you get your podcasts. So, folks, if you have a question for Peter, raise your hand. We'll bring you up on stage. So, Peter, describe what's keeping you busy right now. Are you in Puerto Rico?
I am in Puerto Rico.
You look nice and tan.
Just got back from a Thanksgiving vacation, but I'm here getting for another few weeks, and then it's Christmas. It's time to leave again.
Exactly. So let's talk about gold. What's your forecast for gold?
Well, forecast is higher. It was off to a great year before Trump was elected, although it's still having a great year, even after a little bit of a pullback following the Trump win. But I think a lot of that is the result of some unwarranted optimism with respect to an improving economy under Trump. I mean, maybe the economy will be better than it would have been under Harris, but I still think it's going to get worse. And the dollar has strengthened based on the belief that the Trump policies are going to be good for the dollar. And I don't think that they will. I think the dollar has fundamental problems that are going to weigh it down during the Trump presidency. Even if it gets a little boost early on, I expect the dollar to roll over. And, that's going to be good for gold.
So what do you think gold is a year from now? Price
what?
Yeah, where do you think gold is a year from now? Price target.
Oh, I mean, I don't know how high. I think it's going to be higher. I think it can easily be above 3,000 a year from now. It's 2,600 and change now, so I'd say above 3,000. It could be a lot above, but we'll see.
So you've gotten some flack on Twitter and other spaces for your comments on Bitcoin. What's your take on Bitcoin right now?
Well, I get some slack from the people who have been brainwashed by Bitcoin, or they're just people that own Bitcoin and they just need the price to go up because they're kind of betting it all on Bitcoin. But, obviously I've been, getting flack from the Bitcoiners for a long time. I mean, obviously I should have just bought Bitcoin when they first started teasing me about it because it's gone a lot higher. And that's kind of emboldened them because they think that validates what they were saying, that they were right and I was wrong because the price went up. And I never said the price couldn't go up. I just said that it was a bubble and eventually it would crash. I didn't know how big the bubble would get, and I still don't know. I mean, maybe it gets bigger than this. Maybe this is it. I mean, I think a lot of it depends on what the U.S. government does, because I think people are now pinning their hopes on a Bitcoin reserve where the U.S. government is going to buy 1 million Bitcoin regardless of price, right? They're just going to come in and just buy whatever's there. And I think that that's causing a lot of buying. The other source of buying is companies like MicroStrategy or Mara that are borrowing billions of dollars and issuing billions of dollars of stock, and they're going in and buying Bitcoin. So there's a lot of artificial demand, speculative demand that has pushed the price near 100,000. If we don't get the Bitcoin reserve, which I don't think we will. I mean, I don't even know any congressmen or women who are really in favor of it, other than Senator Loomis, who introduced it. She doesn't have any co-sponsors. I think looking at the internet, I found one congressman from California who said they supported it. Other than that, that's it. There's nobody else. So, I mean, they're making, a big deal out of nothing. But I think the hype surrounding the potential is also causing buying or an absence of selling. And then when you throw the billions and billions, I think MicroStrategy in the last month has spent $11.5 billion buying Bitcoin. And, so that's a lot of buying. And it's not just MicroStrategy's buying that is pushing up the price. It's the fact that everybody knows they're going to buy. It's not like Michael Saylor kept it a secret. Because normally, if you wanted to buy something, if you wanted to buy a lot of something, the last thing you would do is tell everybody that that's what you're going to do, because you want to buy it as cheap as you can. You don't want to let people front run your buying, so you keep it quiet and you just kind of quietly accumulate what you're trying to buy, and you hope nobody notices. But Michael Saylor's
Strategies, yeah.
Yeah, Michael Saylor's real plan is just to get the price to go up. That's why he's buying it, so the price will go higher. And so he's telling people he's going to buy it because he hopes that makes the price go higher. That's his goal. It's not to buy as much Bitcoin as he can cheap. He wants to pay the highest possible price that he can. He just wants the price to go up.
It makes no sense to me.
The whole thing is just a big bubble.
To me, if you want to buy Bitcoin, buy Bitcoin. Don't. The MicroStrategy thing is, you have enormous key man risk. You have enormous risk with the whole price. I mean, if you want to buy Bitcoin, just buy Bitcoin. I think the MicroStrategy trade could blow up in people's faces. So tariffs, what's your take on? Oh, go ahead. Sorry.
Real quick, I think what's going on though with that trade is you've got a lot of institutions that think they're getting a free ride, because what they're doing is they're buying these convertible notes where if Bitcoin goes way up and MicroStrategy keeps going up, they're going to be able to convert their notes and sell and make a lot of money. But if Bitcoin goes down and MicroStrategy stock goes down, they just figure they get their money back. So they think it's a can't lose trade where either they make a lot of money or they don't lose any money. And I think that the people who are doing that are overlooking the elephant in the room, which is if Bitcoin goes way down, MicroStrategy is bankrupt. And so you don't get your money back when the company that you loan the money to is broke and doesn't have any money to pay you back. All they have is Bitcoin, and, they'd have to sell it, and who knows what they would get for it.
Yeah, the MicroStrategy thing made sense to me when you couldn't buy Bitcoin within an IRA, but now with ETFs, I don't really even see the point of why anyone would do it other than it's a leveraged
Well, it's what I just said.
Yeah.
People think they're getting a free roll, but they're not, because MicroStrategy continues to accumulate more and more debt as it averages up its price of Bitcoin. So right now, their average price is almost 60,000. But if they keep buying, near 100,000, the average price is going to keep going up. It'll be 65,000, 70,000. And then all Bitcoin has to do is go to 50,000, 40, 50,000, and that's going to be enough to bankrupt the company.
Yeah. Now, have you changed your mind on Bitcoin at all? Or you still think it's a Ponzi scheme or a tulip thing?
Yeah, no, I haven't changed my mind. I mean, obviously the scheme's gotten a lot bigger, right? I call it a blockchain letter, and there's a lot more chain now than when I first talked about it. But no, I don't see any real use case for it. I don't see anything unique about it. Michael Saylor was on TV today again saying that Bitcoin is the only asset where there's a limited supply. That's just not true. I mean, they're all up, there are a bunch of other cryptocurrencies that have the exact same characteristic. There are a lot of blockchains where the token has a fixed hard cap on the quantity. It's not unique to Bitcoin, and there's no limit to the number that can be created in the future. So it's not this unique asset. And again, it doesn't even do anything as an asset. It doesn't even function as a currency. So why even call it a cryptocurrency? Nobody uses it as a currency because it's slow and expensive to use it. So all people do is buy it and hope the price goes up. That's what MicroStrategy is doing. They're buying it and hoping the price goes up. That's the whole idea behind the Bitcoin strategic reserve. They're supposed to buy the Bitcoin and not touch it for 20 years. Just buy it and put it away, right? I mean, who does that benefit? That only benefits the people who get to sell them the Bitcoin at an inflated price, right? So the whole thing is just a big con. And I think the sooner it ends and the price crashes, the better, because in the meantime, we're wasting all sorts of resources on blockchain and crypto, and those resources would be much better deployed in areas of the economy where they actually can do something meaningful.
We're going to go to our listeners, and we have Holden who has a question for you. Holden, did you have a question for Peter Schiff?
Yeah, Peter, I was wondering what you would think with Trump's tariffs, because firstly, in 2018, whenever he put, or 2019, whatever exactly it was, whenever he first put the tariffs on China, you saw the yuan depreciate, because the tariffs, in theory, reduce China's export competitiveness. So that makes the yuan depreciate, and they actually buy more dollars. So could you see, at least temporarily, the dollar strengthening as a result of China's buying of dollars?
Well, the dollar is already strengthened on the anticipation of the impact of the tariffs, but I think that the markets have got this wrong. If you look at what happened to trade with China during Trump's first term, China's trade surplus with America continued to grow and hit new record highs. Now, maybe it would have grown even more without the tariffs. You can't necessarily prove the counterfactual, but the tariffs did not reduce the trade deficits from where they were. The trade deficit with China went up. And I would imagine the same result if they increased the tariffs. But the thing about Trump is he at least claims that the tariffs don't cost America anything, that the Chinese pay them. But that's not how it works. The Chinese don't pay the tariffs, neither do the Canadians or the Mexicans. Not unless those governments impose tariffs on their citizens. Tariffs are not imposed on foreign countries. They're imposed on American citizens. And they apply to American citizens if they choose to buy products from particular countries, unless they're just across-the-board tariffs, in which case the taxes fall on Americans who buy any imported item. So it's not a free lunch. Americans are going to have to bear the burden. And, taxes make us poorer. It's money that we can't spend anymore. And so adding tariffs is not going to be a good thing. Now, of course, we have huge deficits. So to the extent that the tariffs reduce the deficits, I guess it's better than not having them. But Americans are going to feel that, because right now they're not necessarily feeling the pain of the deficits because we've postponed that. But if we start paying higher taxes to reduce those deficits right now, then we start feeling the pain. Of course, we're going to feel more pain later if we don't do something about the deficits. But the problem is Trump is going to cut other taxes. So it's not like the deficits are going to go down. The deficits are going to go up, and we're going to get the tariffs.
Do you have any hope on the Doge organization, the $2 trillion that they're trying to cut?
I've been around long enough to have seen a lot of this. The first time was with Ronald Reagan. He got elected really as a conservative, not a populist like Trump. And he was very committed to getting rid of government departments. He campaigned to get rid of the Department of Education, the Department of Energy. In fact, he said he wanted to drain the swamp. I mean, he was the guy that came up with that. Trump just kind of, rebranded it. But he gave up. And early in his, I think, maybe in 82 or 8, they started the Grace Commission. And that was a, kind of independent organization led by Peter Grace. And it was there to find cuts, waste, fraud, and abuse, identify things in the government that they could eliminate to make the government, more efficient and more fiscally responsible. And the Grace Commission came up with a lot of recommendations, and pretty much none of them were adopted. And it was like a big waste of time. But it was a lot of hype. It got a lot of attention. And along the way, over the last, 40 years or so, they keep coming up with, gimmicks, ways of studying the problem and recommendations to solve it. But nothing ever happens. It's like, instead of solving the problems, like what government likes to do is create a commission to study it, right? Because that takes them off the hook. It's like, well, we got this commission. We're waiting for their results, so we don't really have to do anything. But they get credit for, putting together the commission to study it. And then, years later, when they get the recommendations, they completely ignore it. So I think what Trump is doing is he's putting Vivek and Elon in charge of this fake department, so he can pretend that he's keeping a campaign promise. He can take credit. Look, I'm cutting spending. He hadn't cut anything. He just helped, set up a think tank to try to figure out how to cut spending and make recommendations. And by the time they make the recommendations, it'll be a year and a half from now, and, they won't do anything. And even if the Trump administration wanted to do something, Congress isn't going to go for it. You're not going to get any real cuts through Congress. That Reagan found that out. The Department of Energy is still here. The Department of Education is still here. I mean, and look at what Trump did. He had one term in office. Not only did he not eliminate a single department or agency, he added the Space Force. Like, well, what do we need that for? So, he did the opposite of what everybody thinks he's going to do. So why would he do that?
I don't know. I'm a little more hopeful this time. I pushed, I knew a lot of libertarians like Steve Moore are kind of involved in this second term.
He was involved in the first term. He was a big deal in the first term.
He wasn't that big of a deal in the first term. They didn't listen to him. It was the Scaramucci people. It was the swamp creatures. The minute Trump was elected,
was there for what, 10 days? He didn't.
No, he had his position for 10 days, but he was there for months before he had that position as the press secretary. He was in the back. I mean, I've had him on the show before, and he was I couldn't, basically from the minute Trump was elected to that period, you had all the council, foreign relation people.
He had his economic advisor was Larry Kudlow, and Larry is buddy with Steve Moore. They also had Art Laffer in there. Those are like,
I don't
the three
think
amigos.
Those guys were really, I know what you're talking about, but I'm going to be hopeful for this term.
Yeah, look, go ahead. You could be, I don't, you could be hopeful. I'm just, I'm a little cynical. I've been through this. I'm 61 years old now, right? I've been living with this, and they keep saying they're going to reduce the deficit. They had these sequester, they had these.
No, they did nothing the first term, but I think the first term was largely done in by Paul Ryan. They're
right, but it's not just Trump. Believe me, you go back to George Bush, both senior and junior. You go back to even Obama.
Obama had the Bowles-Simpson Commission. Yeah, no, I agree.
Yeah, there were all these plans to reduce the deficit. Because you remember when Ross Perot ran, and that's when the public all of a sudden he made the debt a big deal. But and we used to have these debt limit showdowns. We're going to shut down the government unless we do something about the debt. And then they would come up with some gimmick to do something about it. And they'd all congratulate each other. Hey, we got this new plan. And nothing ever happened. We got $36 trillion in debt. We're spending now already $1.2 trillion a year just in interest on the debt. And that number goes up, pretty much every day. By the end of Trump's first year in his second term, we'll be at about $2 trillion a year in interest on the national debt. So nothing has been done. And Donald Trump is not a libertarian. He's not even a conservative. He used to be a Democrat. Now, so he ran as a Republican. Has he surrounded himself with some libertarians? I mean, Elon Musk is a born again libertarian. I mean, I don't never remember him, but all of a sudden now he's reposting Ron Paul, and he's putting out Milton Friedman videos. So I think he gets that, but he's not the president, and Trump is the president, and Trump is not there. Trump just tries to appeal to people, and so he wanted the votes of the libertarians. So when he spoke to libertarians, he said what they wanted. Just like when he spoke to the labor unions, he told them what they wanted. I'm going to protect you from.
Yeah, he reminds me a lot of ways of the '90s of Bill Clinton in a lot of ways. But if you remember, Bill Clinton cut deals with Newt Gingrich second term. So maybe we have that, the second term of Trump. Okay, for those of you just joining us, I'm Josh Jalinski, the financial quarterback. We got about 469 people in the room. Be sure to retweet the space. Follow Peter Schiff at Peter Schiff. Also follow me at Your Financial QB. Next up, we're going to go to some of the listeners. We got Nick. Go ahead, Nick.
Hey, Josh. Hey, Peter. How's it going?
Okay.
Awesome. So I would like to ask about, if the inevitable bankruptcy of America, I understand commodity prices would go up, but what would that look like? Could it be could we refinance the debt? And then, with that, and then it's just after that, the companies that are still doing well, like the Majestic 7 or whatever, with like
Magnificent.
magnificent, whatever. Sorry,
The
but
majestic.
but
That's good.
would our would essentially like the S&P 100, like the top 100 companies, kind of still, even though the market would crash if we went bankrupt, would that still like save us, like our
Well,
just
like a lot, we're already bankrupt basically. I mean, if you just looked at the books, we're not solvent, but we're able to maintain a pretense of solvency because our creditors keep lending us more money. But if our creditors actually wanted their money back, we don't have it, right? And so technically, then we're already insolvent, but we keep going deeper into debt because our creditors don't seem to care yet. But eventually, they're going to care, and there's going to be a debt crisis. And so either we're going to default on the debt, which is going to trigger a whole, domino effect of problems, or we're going to print a ton of money and create massive inflation instead of, defaulting on the debt. But, either way, the people who
what would
loaned
you
us
do
money
if you
aren't
were
going to
in
get it
charge
back,
of those two
right?
options?
Huh? Well, I'm in favor of an honest default. I think that's much better. And a restructuring of the debt where people get paid back less than 100 cents on the dollar. And it would be a lot less than 100 cents because, the key is we need much higher interest rates. Interest rates in America and around the world, for that matter, have been much too low for too long. And this is screwing up the economy. And it's the source of a lot of the problems and the reason that Trump got elected. The standard of living is falling because we're not investing enough in capital and investment and production. We're just borrowing and spending instead of doing that. And so we need higher interest rates, but we can't have higher interest rates with all this debt. So the way we get higher interest rates is to get rid of the debt. The best way to get rid of the debt is through default, right? And now when we have a lot less debt, interest rates could be higher, and the debtors can afford to pay and service it. So we got to get higher interest rates. So we need defaults. But the politicians don't want that because that's an official admission that we're broke and that they screwed up. So we're going to get inflation. I mean, I'm confident that inflation is the path of least resistance. And as much as politicians now want to pretend that, inflation is the enemy, inflation is really the friend of the government. Inflation helps the government get away with a lot of things. And so we're going to get a lot more inflation.
No, thank you. That's, I'm glad you said that, because I think it's kind of like that situation of like tearing the band-aid off fast versus like death of a thousand cuts. And it's just sad because obviously with the AI and the baby boomers, like, they built up all this wealth. And whenever this does happen, if if it happens quick, right? Like all their wealth that they've, accumulated for their whole life that they plan to give to, the next generation would be wiped out. But
Well, it
thank you
depends on how
thank you so
they
much.
how they hold that wealth. But if they hold it in cash, in bonds, in an annuity or some fixed income product, yes, they will get wiped out. But if they own real assets, if they own good companies that they bought at reasonable or cheap valuations that pay dividends, they own real estate, income producing real estate. If they own real things, if they own gold and silver, if they have real assets, they'll hold their value. They may even appreciate in value. So you just have to have the right portfolio to come out of this, in good shape. That's what I'm trying to do with the clients that we have at Euro Pacific Asset Management with customers of Shift Gold, is to get them to get out of the types of assets that are going to get wiped out to inflation, and to protect themselves by owning the assets that will weather that storm.
I do want to talk more about personal finance also. We're going to go to VR and then we'll get some of your tips on personal finance.
Hello, thanks for letting me speak. I just had a couple of questions. With this new ban coming through from China, I was looking in to see our natural resources. Do you think that if we allocated funds to like expanding our production of certain things, it would maybe ramp up GDP to the point where it would affect the debt, or you think that there's really no saving us?
Well, I mean, I think at this point, the debt is so big, and because of higher interest rates, the um, the debt is going to grow so dramatically because all the low debt that we were accumulating during 10 or 12 years of 0% interest rates, as all that debt matures and it's rolled over at 400, 500 basis points, the debt is growing dramatically. Plus, the budget deficits are now multiple trillions a year, so that's adding. So it's hard to grow the economy as fast as the debt, let alone faster than the debt, which would be needed to bring down the debt to GDP. So unless we get some kind of complete massive productivity boom out of AI, which is not impossible, but I don't know how probable it is that we'll get out of jail free with that card.
Well,
I think it's more likely that
I
we're,
would I was thinking like maybe a combination of AI, robotics, and using our own natural resources, like things that we have in Alaska, North Carolina, Pennsylvania, to get these resources out in combination with AI and robotics. Maybe that would affect it,
yeah, look,
because
but where's the money? We have to invest in that, right? And now you have certain companies that are spending a lot of money building out, data centers and powering their AI. But those resources have to come from other segments of the economy. So in order to make the investments necessary to power that AI economy of the future, that there is a big drain on the economy in the short run, and that short one can span many, many years.
Yeah, let's talk about, we're going to move to personal finance. You mentioned, okay, you're a firm believer that we are not headed towards deflation, but inflation. People are listening. They want to know what to do with their money. Obviously, we're not giving investment advice over the airways, over the podcast, YouTube, Twitter, wherever you're listening, but general asset allocation ideas. I know you like hard assets, gold, silver, real estate, foreign equities. If you were to have an ideal percentage asset allocation, what would it be?
Yeah, well, first of all, whether we have deflation or inflation is going to depend rather on your perspective. So if you're talking about gold being money, and if you're thinking about what's going to happen to prices of things expressed in gold, prices are going to crash. Right? Now, the way you're going to see that is the price of gold going up. But the real way to look at an increase in the price of gold is a decrease in the price of everything else. So you're going to see the price of real estate, the price of stocks fall measured in gold. So right now, you buy the Dow Jones, maybe it's 16 ounces, 17 ounces of gold. I haven't done the math, but that's going to fall dramatically. You'll be able to buy the Dow with 10 ounces of gold, then 5 ounces of gold, right? So that means the Dow is coming down, even if the nominal price is going up. So I think in terms of real money, it's 100% deflation. I mean, I think there's no way around that. That's what's going to happen. But the government can print unlimited amounts through the Fed of dollars. And so in terms of dollars, you're not going to see prices falling. You're just going to see prices exploding. But that's just because the dollar is collapsing in value. So from most people's perspective, the outcome is high inflation. But what's actually happening beneath the surface is a massive deflation.
That's a good way to describe it. It's kind of like Lacey Hunt's disinflationary thesis, but in a different way to look at it. What about so asset allocation? So you obviously do stocks and overseas markets and things like that. What do you like right now?
Yeah, well, I still think that the U.S. stock market is a bubble, that it's extremely overvalued based on artificially low interest rates and the money that has been siphoned into the market. And particularly, somebody mentioned the Mag 7 stocks, stocks like a MicroStrategy, or these just pure bubble type companies with no real business other than speculation. So I think that in the long run, people should be accumulating foreign assets, where the valuations are much better, particularly in a lot of the emerging markets where the sentiment is very negative. In the US, everybody is optimistic. Nothing can go wrong, right? The prices are very high. That's not attractive as a long-term investment. I mean, in the short run, it could work out. Prices go up, but it doesn't do you any good if you don't sell and you're not getting a lot of dividends. I think if you're a smart investor, you're accumulating. I've been accumulating these much better values internationally at a time where I think the dollar is dramatically overvalued. So I'm taking my overvalued dollars and I'm buying assets in other countries that I get on sale because of the temporary strength of the dollar. So I have a lot of mutual funds that I manage, global funds, the Europe Pacific Value Fund, Europe Pacific Dividend Payers Fund, Emerging Market Fund, Gold Fund that people can buy to get a broad diversification into that type of strategy.
What markets are you liking? What overseas countries?
Well, it's more company specific, but we have money in Southeast Asia, we have money in Europe, we have money in Australia, Canada, Mexico. I mean, we're investing around the world in good businesses where we can find them that have good potential, good balance sheets, good fundamentals, and just building these portfolios. There are countries that I think are in better shape, so there are going to be some countries that we may avoid because there could be a lot of problems.
Do you like China?
Yeah, we do have Chinese stocks. Most of our exposure to China comes outside of China because there's some concern about potential sanctions that may make it difficult or impossible for Americans to continue to own Chinese companies. So that's a risk that's out there. And it's one of the reasons that Chinese stocks are cheap. But there's also a lot of pessimism around China, which is good if you want to get good prices on stocks. I think a lot of the pessimism is unwarranted, just like I think a lot of the optimism regarding the U.S. is unwarranted. I think we have serious problems that investors are overlooking, whereas I think China has problems, but there are some really good positive things going on there that investors are overlooking.
Do you like any South American countries?
Yeah, I mean, I've been a fan of Chile, Peru. They've been generally moving in the right direction when it comes to less government and more freedom. And so we have some money down there. But in recent years, they've been making some steps in the other direction too. Although now Argentina, which for years was the poster child of failed socialism, now with Javier Milei, cutting and slashing and burning, I have some real cautious optimism on Argentina. You're optimistic on what Trump does. I think there's a much better shot in Argentina, and that's because things in Argentina were really bad for a long time, and so Milei actually ran on a platform of slashing the government, and a different path. And I think the electorate, after all those years or decades of broken promises from socialists, I think they were finally beat up to the point that they were willing to try something else. I think Americans are still wanting something from the government. I think the reason that they got rid of Biden is that they thought that they would get more stuff from Trump. I mean, because Trump never promised to take anything away. He just promised to give people more stuff. He never promised to take away any of the programs or benefits. But you can't make any real progress without making deep cuts in government spending. And so I don't think American voters are prepared for that yet.
Yeah, I'm waiting for the Department of Education to be disbanded. That's the one they'd say every year or every 4 years. We're gonna be done with the Department of Education. Department of Education has actually absolutely no point at all. It's just a pure waste of taxpayer money. There's not one redeeming
just like the
quality.
Department of Energy doesn't produce any energy. It's like it's a waste.
It's like those are two departments that should be done day one.
Yeah, there's only 5 departments that were in the Constitution, from the beginning, or that we had. We had the War Department, which is now the Defense Department. but we had Treasury, we had Commerce, I don't even think we had Interior originally. I forget. There was just a handful of departments.
Yeah, it wasn't a ton.
We don't need all these departments. I mean, we made it to World War II without very many government departments. Now we've got all these departments and agencies. And of course, every time we create one, it's a government in and of itself. They start passing all kinds of regulations that have the effect of law. And there's an army of bureaucrats that work for all these agencies and departments. I mean, we don't need them. The whole purpose of the federal government was national defense. That was basically it. It was like a collective defense program. That's why the original 13 colonies wanted a federal government. Plus, they wanted, a central negotiation. So to the extent that they wanted to, have trade deals with Europe, they were going to speak with one voice, right? For all the 13 colonies will have, one a federal government that will be able to negotiate for all of us, and all the states were going to be a free trade zone. But remember, the states had all the sovereignty. The federal government had minimal powers that were few and defined by the Constitution. Nobody even envisioned, federal taxation other than just little teeny bits. During a war, if there was a war, people thought, okay, the federal government might need some extra tax revenue. But during peacetime, the federal government was supposed to be like an afterthought. And, the main government was the states. And in fact, back then, if you ran into an American traveling in Europe, around, 1800, and you ask them, where are you from? They didn't say, I'm from the United States. They said, I'm from Virginia. I'm from Georgia. I'm from New York. Right? I mean, because they identified a lot more with their state than they did with the Union.
We're going to go to the phone lines. We got Prometheus. Go ahead, Prometheus. Keep it.
Hey, Josh. Thanks for taking the question. Peter, good to meet you. Great thoughts so far. In the space that you have, title here that you have, Josh, you've got Bitcoin in there as well, and we've seen.
Yeah, we already asked the Bitcoin question, so yeah, we'll try to keep it to something else.
Oh, okay. If that's been asked, then sure. I mean, last time Trump was in power, he added 5 million jobs, and the economy grew a decent amount. Considering this is his second term, what do you see in terms of like his economic policies so far that he's outlined and their impacts?
Well, as far as job creation is concerned, yeah, I mean, jobs are added. Look, a lot of jobs were added supposedly under Biden. Now, most of those were part-time jobs, second and third jobs, and most of the jobs went to immigrants, probably a lot of them here illegally. So, yeah, I mean, jobs are going to be created. The population is expanding. People are getting out of school every year, and they go to work. But the question is, are those jobs productive? Many of them are not. A lot of them are government jobs, which are worse than productive. They actually sap the productivity of other jobs. But there's a lot of service sector jobs that, really don't add any goods into the economy. That's why the trade deficits continued to rise throughout the Trump presidency, because we became more and more dependent on imports because the jobs we were creating weren't producing goods that Americans could consume. So I think those trends are going to continue. I don't think the tariffs are the game changer. What we need is substantial deregulation. We had some under Trump's first term, but not nearly enough. But the overlying problem is that interest rates are going to stay low and the debt is going to stay high. And so the best thing that Trump is going to be able to do is blow more air into the bubble and keep it from popping before his term is over. But that's the course we're on. I don't think it's a game changer. I don't think the swamp's going to get drained any more this time than the first time, which it didn't. There was more water in the swamp. It was deeper when Trump left office than when he came in.
Now let's go back to personal finance. What is the single biggest investing mistake that you've seen over your career?
Oh, I mean, I don't know. I've made a lot of them. I mean, obviously, you mentioned Bitcoin. I could have bought a bunch of Bitcoin when I first heard about it and sold out, with
Yeah.
with a tremendous amount of money. And of course, I missed out on a lot of these big bubbles because I saw them for what they were. I didn't really make any money during the dot-com bubble. I made a lot of money after it popped. I didn't make any money on the housing bubble, but I made good money when it popped, at least, on my bet against mortgages. Um, and I did really well in gold and commodities during the aughts, from 2002 through 2011, did really well. We had a setback in '08 on those positions, but then they came back. But yeah, I mean, I've missed out on some of the bigger trading moves based on my constantly overestimating the intelligence of other investors. Yeah. And these bubbles get a lot bigger than you think that they might. And so I've been cautious, and as a result of that, I've missed the opportunities to take advantage of other people's greed and ignorance. And that's a perfect, Bitcoin is a perfect example of that. A lot of foolish and greedy people have bought it, and that really made a lot of money for the people who got in early, anticipating that foolishness and that greed, and cashed in on it.
Are there any particular things that you see, hey, here's another bubble about to pop? Like I saw, I'm in a lot of ways kind of like you. My one negative is I've been too conservative on certain trades. But I, bought some real estate after the market crashed, the '08 market crash. Do you see any, like, here's a home run waiting, just be patient? Other than you mentioned,
We'll see. I mean,
markets.
I've made some investments that have gone way up. I mean, I have some stocks that I own that have gone up, 20 times, 30 times. So I've had some real home runs, and I've invested in companies that have gone bankrupt, and I've lost 100%. So yeah, that happens. I mean, if you've been around long enough and you make enough investments, I mean, some of them you're going to hit out of the park, and some of them are going to be strikeouts. But most of them are somewhere in the middle, right? They're not a complete disaster. But they're not a 20 bagger or 30 bagger. Maybe they're in the middle.
Do you like miners now?
Well, I've liked them for a long time, and it's been a painful trade. I mean, some of the miners I have done really well, but the majority have really not. I mean, obviously, I'd been better off over the last 10 years if I didn't own any miners and just owned the Nasdaq.
No, appreciate the honesty. Yeah.
But I think that in the end, I'll end up with more money when the music stops, because most people that are in the Nasdaq and have been in it are still going to be in it. That on the way up in the 2000s or the 1990s, the Nasdaq went up to 5,000. Of course, it's much higher now, but then it dropped to 1,000. It lost 80%, and a lot of stocks went down a lot more than 80%. A lot of people got wiped out that had paper profits. They ended up having real losses. Yeah, eventually people came back, but there were some big losses, and people went away very unhappy when the dot-com bubble popped. And the Nasdaq would have gone down a lot more than not 80%. I mean, it would have gone down 90%, which is significantly more, had Greenspan not cut interest rates to 1%. I mean, the Fed kind of put a floor beneath the market, but it would have gone lower had the central bank not made that mistake. And it was a mistake. Cutting rates that low was a mistake then, and it was a bigger mistake later to bring them to zero. But the problem was, but the time after they blew the real estate bubble, as a result of the 1% rates, that bubble was so big that 1% wasn't low enough anymore. They had to go down to zero to keep the bubble reflated. They're reflated, and they had to go to quantitative easing. So this one is much bigger now, so that they're going to have to pull out all the stops to try to blow this thing up again.
Yeah, we saw that in COVID 2020. I mean, they did whatever they could to keep the
I got all these little bugs in the studio. I got to figure out how to get rid of these things. They're driving me crazy. I don't know where they came from. They've been in here for like these little teeny gnats are just flying around in it, just like.
Well, I guess that's a problem living in paradise, right?
No, I don't know how they got in here though. Maybe somebody left some, like a piece of fruit or something in here, and the bugs kind of grew around. I don't know, but I gotta. They've been in here.
Fruit fly.
Really annoying.
Okay, we got about 10 minutes left. We got Vicky with a question for Peter Schiff of Euro Pacific Asset Management. You can check out his work on europac.com. And also make sure you follow him at Peter Schiff. Follow me at Your Financial QB. Retweet this space. Also subscribe to my podcast, The Financial Quarterback, on Apple or iTunes. I will tell you, I mean, we had you on, I don't know, years ago. I think I was in Hawaii on vacation. And, you know, I think gold was really low back then. And you were pushing gold, and that was a great trade. So kudos to you for that.
Well,
trade.
look, I've been recommending gold for 20 years.
Yeah.
You know, gold has beaten the S&P over those 20 years. So my gold call has been a good call. You know, when I started
Epic
really
call.
recommending gold on television, it was, $300 an ounce. And, now it's $2,600 an ounce. So gold's done very well. Gold stock's not as well as the metal itself. But, people have bought a lot of gold from me over the years. And most of them still have it, so they've done very well, with that gold. But I think that the gains that we're going to get over the next 10 years, I think, are going to be much, much bigger percentage-wise, especially in relation to the stock market. Because the stock market's gone up a lot, too, over the last 20 years, just not quite as much as gold. The next 20 years, I think, will be a lot worse for the stock market, particularly maybe the next 5 to 10 years.
I don't know.
Relative to gold.
Yeah, perhaps. Go ahead, Vicky. You're on with Josh Jalinski, the financial quarterback, and Peter Schiff.
Hi, all. So I have a couple of comments and some sort of financial questions. So I'll start with the comments. Regarding previous speaker question about economy, and Josh, you were a bit, I think, pessimistic that whatever will continue to be, and the bubble will roll. I don't know. I'm not sure, but I'm very curious because of Trump's team, and especially Peter Navarro, whose credo is to bring manufacturing back to United States. Now, each one of us has a learning curve in a new job. So previous Trump administration, I see it as some sort of learning curve, and he seems to draw very correct conclusions, because this time he's surrounding himself with people who he know, I think, rather well, and who will enable.
Yeah, so what do you say about that? Now, so thank you, Vicky.
So I'm not sure, with all due respect, that whatever was will be again. I would also pay attention to his commerce secretary and to his treasury secretary. So we'll see. Again, Peter Navarro, I think, was a driving force behind him, and is projected to be, again, a driving.
Okay, yeah. So, Vicky, I'm going to mute you. So Peter, because we got to try to get to everybody's questions. So basically, her question is, she's a little more hopeful. She's like me, but
yeah. Well, look, we absolutely have to get. Look, we have to get manufacturing back to this country. I've been advocating that for a long time, but we can't do that without a very severe recession. That's the bottom line, because the resources that we're going to have to devote to rebuilding factories, reestablishing supply chains, retraining our workforce, that's going to necessitate a big recession, because we have to take those resources from other parts of the economy and redeploy them. And so that means that consumers have to spend a lot less money buying stuff, and they have to save a lot more money. And so the transition from a bubble economy where we borrow and spend to a legitimate economy where we save and produce means we're going to have a recession, means asset prices are going to come down. There's going to be some short-term pain to get the long-term gain. That's why we're not doing it, because no politician wants to preside over the short-term pain. Everybody promises immediate gratification. That's what Donald Trump said. Vote for me, and you're going to be rich immediately. It's going to be an economic boom unlike we've never seen before. It's going to be just an explosion of wealth, and everyone's going to be so rich. All you have to do is vote for me. So he didn't promise any kind of austerity, any kind of tough love, any kind of, hard times, before we see the light at the end of the tunnel. So I don't think it's going to happen. I don't think he's going to decide to sit, to level with the public and say, I made a lot of promises. I took another look and I realized that I can't keep them. We're in for some tough years. If you thought things were bad under Biden, unfortunately, they're going to get even worse under me. But the good news is we're going to make the necessary reforms. And so down the line, it's going to be better, but you're going to have to suck it up for a while. We're not going to get that message from Trump.
Maybe the 2 trillion in Doge. Go to the next questions. We got to leave room for a couple more. No, we got to go. You already did a short one. Thank you so much. We're going to go to the next questions. Guys, you got to be respectful. We got how many minutes do we have, Peter?
Oh no, it's almost an hour.
We
so
we
let's
got
not...
4 minutes. So let's keep your questions. If you guys ask a question longer than 30 seconds, I'm instantly sending you down to the audience. So please be respectful. We got like 3 minutes. So next up we have Nick. Go ahead, real quick.
Thanks. Real quick, would you be willing to have a space and additionally work for the Department of Government Efficiency for free, for no money? Would you be willing to do that?
Well, I mean, I don't know what I would do in the Department of Government Efficiency.
Yeah, you'd probably be fired.
Well, I mean, I want to make real deep cuts in Medicare, Social Security, Obamacare, and all that stuff is off the table. So if it's just kind of looking for waste, fraud, and abuse in the discretionary spending, I mean, that's not my forte. I'm not, a bean counter. I mean, sure, there's guys more qualified to study, all the expenditures in government and make recommendations as to how government can be efficient. But the problem is, and something I recognize, is that you're never going to have efficiencies in government because you don't have the incentives in government. The reason the private sector is efficient is because people are making decisions with their own money. And if they save money, then they get to keep the savings. And you have competition. If I'm a businessman and I'm not efficient, but my competitor is, he's going to undercut me and I'm going to lose market share. So there's a lot of market forces that force efficiency on the private sector. None of those forces exist in government. So you're never going to have efficient government. You have to accept the fact that whatever government you have is going to be very inefficient. And so the only solution is to keep government as small as possible so that you minimize the waste, fraud, and abuse because they have less money to waste because the government is smaller. So really what they should be doing is making recommendations on what government functions can be completely eliminated. And I mean, I don't even need to be, I can write up a list right now. I can probably spend an afternoon looking through everything the government does. And just if it's not authorized by the Constitution, get rid of it. Get rid of this, get rid of that, get rid of that, but so I can do the whole thing pretty quickly in that respect. But I don't think anything is going to happen as a result of the Department of Government Efficiency.
I just say if you did that, you'd be a hero, man.
But nothing's going to happen. I don't even need a department. I can make my own recommendations. Anybody can do it. The Department of Government Efficiency is no different than any other private think tank. Anybody can study the government and make recommendations of things that they can cut. There's nobody. But they don't care. Look, Rand Paul has been in the Senate for now since 2010.
Wow.
And every year he comes up with the crazy things to cut. Whatever it is, like paying squirrels to see how if they enjoy sex to rap music more than new wave. I don't know. I mean, all kinds of crazy things that the government, and he can't even get rid of that stuff. I mean, forget about any of the real serious stuff. He comes up with these every year around Christmas time. You'll see it again. It's a long list of things that we
Tom
waste money on.
Coburn did it for years before, and they never did any of those things. Like in New Jersey, it's like the horned tree frog. The mating rituals. It's crazy.
Look, I mean, And people say, well, if Trump wanted me in the cabinet, would I take a job? I mean, I probably would, but I mean, it's ridiculous. I'm not going to be offered a job.
Well, not with that attitude.
Yeah.
Well, my attitude is I really want to cut stuff.
Yeah, I would only.
And
yeah.
the
I would
big,
agree.
and then he's surrounding himself with a lot of these crypto guys, and they only have one agenda, and that's to get the price of Bitcoin up. They don't care about anything else.
Number go up. So, final question: what is the single best financial tip you'd give to our listeners on their own personal finance journey?
Well, I mean, look, people need to underconsume. If you want to have money to invest, you have to save. Unfortunately, you can't save in dollars because the government is destroying their value. So you have to find alternative ways to invest the money you don't spend. But that's what people need to do. People need to, if they can, start a business. You're going to be far more successful in life if you can, have a business. Because if you decide to accept the lot of an employee, you're never going to be more than a cost, right? And your boss is going to try to minimize what he pays you to maximize what he earns. Now, you have, to the extent that you can offer a lot of value to your employer, you can get higher pay because otherwise you'll quit and go someplace else. But you're not going to earn as much money working for somebody else as you will working for yourself. I mean, there are some exceptions. Football players, you're a quarterback, you're making 20, 30 million a year. Most of these guys couldn't make that much money if they just decided to work for themselves, right? Working for the NFL and getting a job, they can make a lot more money than trying to start a company on their own, throwing footballs around or whatever. So yeah, there's going to be circumstances where being an employee can work out. But overall, the richest people in the world are not employees, right? They started businesses, they own businesses, they grew businesses. So that you want to try to do something entrepreneurial if you're cut out for it. Try to find out the things that you're good at and the things that you like, and hopefully you could find something that overlaps, something that you're good at and you enjoy doing, and then work like hell. Because to be successful, you're going to you can't punch a clock and say, oh, I worked 8 hours today, I'm done for the day. You're going to work 16 hours a day. You're going to work weekends, right? So you have to really put in the effort. But if you're committed, you could do really well and make a lot of money. And to the extent that you make a lot of money, you should send some of that money at least over to my company to manage for you, Euro Pacific Asset Management. We can help you manage the money that you make so you don't lose it and get it to grow, and buy some gold and silver with your income. And you can do that with gold.
Thank you so much, Peter Schiff, Europac.com. And where can our listeners find more about you? Europac.com or your podcast?
Well, Europac.com, if they want to, get in touch with my company and talk about our managed accounts and my mutual funds. Schiff Gold, if you want to buy yourself some gold or silver. But if you want to, just listen to what I have to say, listen to my podcasts. I do 1 or 2 a week, sometimes 3, but usually 1 or 2. And I post them up on my YouTube channel, Peter Schiff, on Schiff Radio. I think I've done 995 podcasts now. Wow. So I'm only 5 podcasts away from 1,000 episodes. So I've been doing it for a while.
Congratulations.
So listen to those and follow me on social media. Obviously here I'm on X, I've got over 1 million followers. You can start following me if you're not following me. But also I'm on Instagram and TikTok and Facebook. I'm not as active there. My biggest platforms are YouTube and X. But, just follow me. I have a new business that I started at the end of last year, Schiff Sovereign. It's a publishing. We have a free newsletter. We have some premium products. But at a minimum, you can go to schiffsovereign.com and sign up to get the free newsletter. Comes out 2 or 3 times a week. A lot of good stuff in there. So make sure and add that to your inbox.
Thank you so much, Peter Schiff. Everybody follow him at Peter Schiff. Follow me at Your Financial QB and retweet this space. Thanks for joining us, Peter.
All right. Thanks a lot, guys. Have a good day.
Thank you all for joining us. Be sure to follow us for more.